Friends, I welcome you all to our today's session. Today we are going to discuss the concept of income. So earlier friends were aware about the scheme of taxation, and in that context we have discussed that every person whose total income of the previous year, if that exceeds a maximum amount which is not chargeable to income tax, is an assessee, and his income will be chargeable to income tax at the rate or rates which is prescribed in the Finance Act for the relevant assessment year. So this concept we have discussed. And while discussing, we have also touched upon various issues like it is the total income which is chargeable to income tax. Is it not? And we have also understood total income is different from gross total income. So there is a concept called as gross total income, which we have already discussed. And after allowing certain deductions from the gross total income, we'll be only able to arrive at the total income. That total income is chargeable to tax. But if you look at the earlier slides, or if you see our earlier discussion, we have seen there are 5 heads of income. Can you recall what are the 5 heads of income? Please unmute and speak.
So salaries, income from house property, profit from business or profession, capital gains, and income from other sources.
Okay, so these are the 5 heads of the income. And under each head, there is a possibility there might be multiple sources of income. Let us say profit and gains of business or profession, there might be 2 businesses, 5 businesses. Let us say income from house property, there might be 5 houses. Okay, these possibilities are there. So there are various sources of income, but there are 5 heads of income. And under each head, how income will be computed, that various methods are there which is prescribed in relevant sections. So we'll be seeing that in appropriate time. But before that, today let us plan to learn the meaning of income first. First, let us see what is the meaning of income. Then we'll see how the total income is to be computed under various heads. And in order to understand the meaning of income, first we need to read the definition. And where the definitions are provided?
Also section 2.
Yes. So we have to refer to section 2. So let us first go to the section 2 and let us search what is the definition of income. Let us have a look at look at the same. Then I will be showing you my slides. So let me first take you to the income tax department side. Just give me a moment. 1 second. Yeah, I think you are seeing the homepage of incometaxindia.gov.in.
Yes,
and we're interested
Yes,
to know
sir.
the definition of income. Here I'm clicking. Let me go to the acts. Here is a link, and let us visit to Income Tax Act. Income Tax Act. Okay, let us go to section 2. Section 2, you can find out various clauses in alphabetical order. Right, and here let us search the meaning of the term income.
So section 2 clause 24.
Section 2 clause
24.
Yes, that is what I am looking, plus 24. Yeah. Yes. Now just have a look and tell me what kind of definition it is. Is it an inclusive definition or exclusive definition? Here is clause 20.
So inclusive.
Inclusive definition. That means the income has not been exhaustively defined in the act itself. Only inclusive definition has to be given. That means there might be many other things which are not mentioned here, but still those may be recognized, or those may be understood as income. Okay, here you see several items are like they are like profit and gains, dividends, voluntary contributions received by trust, etc. You see list of items are there. Just have a look. Are you able to see it?
Yes,
Value
sir.
of perquisite, special allowances, you see. So many items are there. Okay. How many items there in total?
So, 17.
18.
Even
17
18.
is some items. Yeah, it's
Yeah,
18.
18.
18, but here you can see this 17A, 17B. Okay. Here you can see this is 12A. No, 12A is there. 12 is there, 12A is there. Okay, 17, in fact, 17, 17A, 17B. 3 items are there. So many items are there. Right? So you may, this is the source. If you want to understand what is the meaning of income, exactly you need to visit to the source itself. You can check from the definition what is the meaning of income. Now I am showing my slide. Here, let us learn. The same thing has been summarized in a different style. You see, section 2, clause 24 explains the meaning. As you know, it says income includes. First point, can you read it?
Profits and gains.
Now, one by one, we'll read it. Profit and gains. Income includes profit and gains. Profit and gains space. These are something which is, or which a person adds when he does some business or he is in some profession, he adds some profit and gains. Okay. So how this particular profit and gains will be computed, we'll be learning when we'll be learning the provisions related to profit and gains of business or profession. So profit and gains are income. Point number 2.
Dividend.
Dividend. Dividend means profits of a company when it is distributed to the shareholders. That is called as dividend. That is income. Okay. There are certain exemptions. These exemptions are applicable that income may be exempted. But as per definition, that is income. In certain situations, dividend declared by Indian company may be exempted. That's a different thing. Okay. Income includes exempted income also. So dividends are income. Point number 3.
Voluntary contribution received by any charitable, religious trust and a fund, university, educational institute, hospital.
So if there is some voluntary contribution or donation like thing which is received, voluntary contribution means there is no compulsion to pay. A person is voluntarily paying without any consideration. That is called as voluntary contribution. Okay, if that kind of contribution is received by a charitable trust or a religious trust or a fund or a university or an educational institution or a hospital, if this kind of contributions are received, they are income. It's a different story that the trust income might be exempted. He might have got some income tax exemption certificate from the authorities. That's a different story. In that case, the income may be exempt. But that is an income. Are you getting my point?
Yes, sir.
Yes, sir.
Okay. In case that trust or educational institution or hospital is having an income exemption certificate, which is popularly called as 12A certificate. Okay, that particular institution might have registered himself under 12A of Income Tax Act, and he might have got an exemption certificate. In that case, his income might be exempt. But first of all, that is an income. If that exemption is not specifically made available to the trust, then it is taxable. Okay. Point
Yes,
4.
Perquisite or profit in lieu of salary.
These two concepts we'll be discussing when we'll be learning the chapter salaries, perquisites means non-monetary benefits, and what is profit in lieu of salary. The certain items are defined in lieu of salary that profit may be earned, that will be also treated as income. Okay.
Yes,
Right.
sir.
Perquisites means non-monetary benefit. Let us say free car is provided to an employee. or free house is provided. Money is not provided, but some facilities are provided. So this type of perquisites and profits in lieu of salary are also income. Point 5.
Special allowances for performance of duty.
Certain special allowances. These allowances also will be learning in salaries chapter. Okay, let us say for performance of duties, let us say city compensatory allowance. This type of allowances, some allowances are given. So those allowances are also income. Point 6.
Allowances to meet personal expenses.
Yes, let us say some personal expenditures, but allowances are paid. Employer pays this type of allowances. Let us say your something like the leave travel allowance. Employee is going on leave and he's traveling to some places and some allowances are provided by the employer. They are also taxable. Point 7. They're also income, first of all. Taxable or not, certain exemptions are there, and appropriate time when we will be learning salary chapter, we'll be understanding those things. Now, point number 7.
Benefit for convertible in money or not obtained by a director, relative of a director, or person having substantial interest, 20% or more versus right.
Now, this means benefits are perquisites. So certain benefits or certain perquisites, maybe monetary, maybe non-monetary, which are convertible or money or not. If this type of benefit are received by the director, suppose there is a company director is getting some benefit, or relative of the director. Director is not obtaining this benefit, but director's relative is getting such type of benefit. Okay, it may be a perquisite. Suppose a car is given to him to use for personal purposes. That is a perquisite. Okay, it may be received by a director or relative of the director, or a person having substantial interest. What is substantial interest? Substantial interest means he's having some shareholding in the company. Substantial interest under Income Tax Act to be understood when a person is having 20% or more voting right. Okay, this B right stands for voting rights. Okay, that means if he's having holding more than 20% or 20% of shares, then he is having 20% or more voting right. That he will be understood as a person having substantial interest. Are you getting this point? He's having substantial interest in the company. And if that person or a director or a relative of director is getting some benefit or perquisites, that will be treated as an income. Are you getting it?
Yes, sir.
Point 8.
Benefit for convertible in money or not obtained by a representative associate.
Okay. So if a representative associate, suppose for a trustee may be treated as a representative associate. For a non-resident, his Indian representative may be treated as a representative associate. If these type of representative associates are receiving some benefit or some perquisites, which may be convertible into money or not, doesn't matter. So that will be treated as income. Point 9.
Sum chargeable under section 28, 41, and 59, that is compensations, cash assistances, etc., deemed profit recoveries.
Okay, so when we will learning the chapter PGBP, Profit and Gains of Business and Profession, these sections I'll be explaining you in detail at that point of time. Just at this stage, have some idea if some cash assistant compensations are received or some deemed profit recoveries, some kind of money is received under these heads, under these sections, with then they will be also treated as income. Point 10.
Capital gain chargeable under section 45.
Yes, such capital gain is separate head of income. Okay, when you will be learning the charging section, you will be understanding what is capital gain. So there is a concept of capital asset. First of all, we need to understand what is a capital asset. And when a capital asset is transferred, then capital gain arises or capital loss arises. If it is a capital gain, it is chargeable as an income. Okay, so provided, first of all, we have to see a capital asset should be there and capital asset must have been transferred. Okay, so the income, that capital gain which is earned out of that transfer will be treated as capital gain. Point 11.
Yes, sir. Profits and gains from business of insurance by mutual insurance corporation or corporation of
Cooperative
OPCs.
society. So if it is a some profit and gains earned by mutual insurance company or cooperative society, then also it is an income. So one man say it is a mutual association. No outsider is involved. But here, if it is that mutual association or mutual or that cooperative society or company is doing mutual business of insurance, then that will be treated as its income. Okay. Point 12.
Banking income of cooperative society.
Okay. If the cooperative society is there and cooperative society is doing banking activities, that income is also treated as an income. Point 13.
Winning from lotteries, crossword, puzzles, race, card games, gambling, betting, entertainment program in electronic media.
All these activities or income generated from all these activities are income. Winning from lotteries, crossword, puzzles, race, card games, gambling, betting, entertainment program in media. If the money is received through these activities, they will be treated as income. Okay, right. So just money is received from lotteries, that is an income. Crossword, all these activities you are familiar with, and the entertainment program in electronic media, this is also uh, a source of income. If some money is received, it may be any kind of entertainment program. Okay, earlier there were some cases on this issue, and now it is settled case. Now, in case someone is earning some money through entertainment program in electronic media, then it is an income. Okay, right? Any query you have on this?
No, sir.
No. Point 14.
Some receipt from employees as PF, ESI, superannuation, welfare fund contribution.
So these are the money what happens. Provident fund, ESI, superannuation fund, etc. What this particular point says, some received from employees. How some is received? Normally what happens? Employer deducts some money from PF, for PF, ESI, superannuation fund, etc. Okay, some of you might be aware of this concept, right? Concept is that how provident fund, ESI money is deposited. So there is an employer and there is an employee. Okay, when salary is paid, employer deducts some from employee. Is it done? So employer's contribution, employee's contribution, both come together. Plus some admin charges is added by the employer. Admin charges is added by the employer. Then it is deposited with PA percentage.
Yes, sir.
Right. So if some money is collected from the employees on these accounts and it has not been deposited, then that is called as some received from employees as PF, ESI, superannuation, welfare fund contribution. That is income. But when it will be deposited with the appropriate authorities, then that is an expenditure. That is an expenditure. Okay. But if it has just collected but not deposited, that is an income.
Yes, sir.
Understood?
Yes, sir.
Now, some received from key man insurance policy. Point number 15. In an entity, there might be some very important persons, key man, business that gives a lot of business to the entity. Right? The company might have taken, or the entity might have taken some insurance, key man insurance against them. So if the person dies of their leave, compensation will be received. The compensation may be received by the employee himself, or by the company, or by the employee's legal heir or the nominee. Depending upon the type of receipt, it will be taxable under different heads. Okay, key man insurance policy. If that kind of insurance, the amount is received, that will be treated as an income. Understood? These 15 points.
Yes, sir.
Okay. Now, next, point number 60. Please read it.
Yes, sir. Amount received for not carrying out any activity, not sharing patent, trademark, etc.
Okay. So, if you have received some compensation for not carrying out any activities, okay, compensation for not doing something, or not sharing patent or trademark, etc. That money is received, which is received, that is treated as an income. Understood? Point 17.
Yes, sir. Fair market value of inventory, which is converted into or treated as capital asset.
If there is some inventory means your stock items. Okay. And that inventory is converted into a capital asset. Okay, you read it once again. Fair value of an inventory, which is converted or treated as a capital asset. So you had some inventory, but you are treating it as a capital asset. That will be treated as an income. Can you think of some example?
So sometimes like those who has restaurant as their chain businesses, sometimes to provide services, they have also set up cloud kitchens.
Okay.
So where they actually prepare their food and sell, and so give like for delivery purposes, it is also very I'm not getting the exact word, but it's very it is very good for them if they like establish a cloud kitchen, and it is very good for the consumers and for the delivery prospects also, and they earn from that. So in that, whatever they earn from it, that, and it is also their capital asset, so that can be something.
I'll give you to explain this thing. I am giving one example. Okay, let us read it once again. Fair value of inventory. First, let us understand what is inventory. Inventory means those stock items which are bought and sold by the business. Okay, suppose you are a jewelry dealer. So jewelry is your stock. Jewelry is not your capital asset. Is it not? It is your stock. Similarly, suppose you are a vehicle dealer. Then the vehicles are your stock. That is your inventory. You purchase vehicle and sell vehicle. It's not. Let us say you are a car dealer. What is your inventory? Car is not your, those cars which are lying as your stock, they are not your inventory. They are your inventory. They are not your capital asset. Are you getting? But for other business, suppose you are not a car dealer, you are a furniture manufacturer, but you got a car. That is your capital asset. Okay. Are you getting? And let us say this
Yes, sir.
example, what is saying, an inventory which is converted into capital asset. Let us say there is a car dealer who is having car as an inventory, and he is converting that inventory into his capital asset. That he is saying that this car, I will not sell it. I will use it for my business. That is my business asset, capital asset. That means he himself consuming that asset. He himself consuming that inventory and transferring it to getting it transferred as capital asset. In that case, that inventory will be treated as if it is sold. Are you getting? And the fair value of
Yes,
that
sir.
inventory shall be treated as income. Are you getting?
Yes, sir.
Got an example? Got the understood the example?
Yes, sir.
Okay, so that is also an in. Now, point number 18.
Gift greater than 50,000 except from relatives.
Okay, this concept will be understanding when you will earn income from other sources. At that head, you will be understanding gifts of 2 rupees, 50,000 rupees are normally exempt if in certain situations. If it is more than 50,000, it will be taxable and it will be treated as an income. Okay, there are certain exceptions. Okay, apart from those exceptions, if gift is received and it exceeds 50,000 rupees per annum, then it is an income. Point number 19.
So before that, I have a doubt. Like in Indian, as per Indian system, like in marriages, like we receive a lot of gifts, not only from relatives and also from well wishers, from friends. And suppose whatever gift I receive, it exceeds 50,000. So for that particular year, it will be calculated as income.
No, gifts on the occasion of marriage from relatives are exempt.
So what? Not relatives, if friends give.
Still, that is on the occasion of marriage, those gifts are exempt.
Okay, sir.
Okay, so in detail, we'll be discussing what are the conditions attached to that when we will be learning the head income under the head income from other sources. At that time, we'll be discussing this thing in detail.
Yes, sir.
Okay, now 19.
Consideration for issue of shares exceeds FMV.
Consideration for issue of shares when it exceeds fair market value. That means, suppose a share is transferred, the shares of a company are transferred, and consideration is in excess of fair market value. So fair market value of the shares is 20 rupees, but you got a amount of 30 rupees. That's the excess money you are getting. That is the consideration for issue of shares that exceeds the fair market value. That excess money is the income. Okay.
Yes, sir.
Point 20.
Any sum of money received as advance if such sum is fortified consequent to failure of negotiation for transfer of a capital asset.
Okay, any sum of money received in advance. Suppose you are planning to sell an asset and you have received some money in advance. For example, you are planning to sell your land and some money is received in advance. And that money is forfeited. You are not going to pay back because that negotiation failed. Suppose situation was like this. You are you're planning to sell your land and condition was something like that the buyer is supposed to pay 50,000 rupees in advance and he paid, and another 50,000 he has to pay in 7 days. If he doesn't pay, then the advance money which is already paid will be forfeited, if that was the condition. So first you receive 50,000, the remaining 50,000 the buyer could pay in 7 days. What has happened? The negotiation failed, and consequently the advance money which is received is forfeited. That means this need not be repaid. Are you getting?
Yes, sir.
That kind of situation, in that kind of situation, the money which is received in advance will be treated as income.
Yes, sir.
Okay. Next one.
Any sum of money or value of property received without consideration or for inadequate consideration by any person.
Any sum of money or value of property received without consideration or inadequate consideration by any person. Right? Suppose someone has given you some money without any consideration and voluntarily he has paid. Or consideration was inadequate. You have received a piece of land for rupee 1. So you are understanding that consideration is inadequate. So this is the value of money or any sum of money or value of the property received without consideration or for inadequate consideration. If this kind of receipts will be treated as income. Okay. Right. Inadequate consideration
Yes, sir.
means inadequate consideration in monetary term. Okay. One cannot say that I have received this land for ₹1 and the consideration is natural love and affection. That will be treated as inadequate consideration because financial consideration is inadequate. Are you getting?
Yes, sir.
Point number 22. You see, in all these cases, all these examples, many arguments are possible. Just like I just now I was giving you this example that inadequate consideration. I told you that natural love and affection may not be treated as adequate consideration. Okay, but one may argue, and in some cases also it has been decided, when this particular thing, that natural love and affection could be evaluated, or it could say that it is not inadequate, it is something like there is some consideration. Let me give you an example to explain this. This is a case where a patient who was treated in a hospital transferred all his property to a doctor. Okay, and incidentally, the patient also passed away. Now, question is that whether this case, the entire property which is received by the doctor, will be treated as income or not? Just tell me, just answer me by doing this plain reading of this section. Is it an income? Now you have seen the definition of income. Tell, is it an income?
So if there is inadequate, it is not inadequate, I guess. If that patient has been transferred, it then that through
Patient
that
has
is
transferred the entire thing to the doctor without any
yes, sir.
consideration.
So then also we also receive property from our parents through will or through any kind of like a transfer that is done legally, and we don't pay for that. So in that case, if he doesn't
No,
have
you
any
answer me
successor,
by
if
doing
he
the
goes,
referring to the section. What this particular section says. Is it an income or not?
Sir, can you repeat the question?
Question is that, first let me show you the provision. Read this particular line. Point number 21. Any sum of money or value of property received without consideration or for inadequate consideration by any person. This is treated as income. My situation was that one doctor was being treated in a hospital. Sorry, a patient was treated in a hospital. Right. He settled all his bill, went home. Okay. After some days, he passed away. But before passing, what he had done, he had transferred all his property to a particular doctor who was taking care of him in the hospital. This is the case I'm giving you. Now answer me, in this situation, in the hands of doctor, whether that property which is received by him is an income or not.
so it is an income.
It is his income. Okay. Yes or no?
Yes, sir.
If you go by the plain reading of the section, it is his income. This is some property or sum of money received without consideration. Okay. But in that situation, what happens? The doctor could argue that this is not without consideration. Because during the treatment, he has provided some services. Okay. And these services was the consideration. Then doctor could argue that this is not inadequate consideration. The consideration is adequate and there is some consideration. Okay, so it cannot be treated as something which is received without consideration. So this kind of arguments are possible. One may argue on this line.
So, I have a doubt, small doubt related
Yes,
to
yes,
the
please.
same question. Like the doctor treated the patient, and in return also the patient cleared the bill and gave his, whatever he charges for that treatment. So he already paid for the services,
Yes, if
and
that is
if
the
out
argument,
of
if that is the argument, he has paid it to the, let us say, nursing home or to the hospital. But the doctor could say, apart from that, he has provided some additional services. Okay, he had
okay, sir.
taken some special care of that patient, and that is why the patient became so happy and transferred the property. It's not that just like that it transferred to anybody. In
Okay, sir.
addition to the normal treatment, he has provided some special treatment or he has taken some special care. That is why this particular patient transferred the property. Therefore, consideration should not be treated as inadequate consideration. And it is not just because of natural love and affection. There is a consideration for this.
Yes, sir. Got it, sir.
Okay. So you see, reading the section is one thing, then interpreting that thing and finding out true false is again, as a lawyer, we should think about in that. Similarly, now going back, let me go back. I told you, just a minute. Yeah, here I was showing you this particular item, winning from lotteries, crossword puzzles, gambling, etc. Earlier, this particular provision was in different names. It was not appearing like this. Now it has been amended, it has been corrected. It was like this, winning from lotteries, crossword puzzles. Here, race was not there. Here it was there, horse race. Okay. So people were doing camel race, ox race, and they're saying, you see, it is not coming within the purview of the section because your section says what? Horse race. So any income generated from horse, let's say camel race, is not an income. Are you getting my point? But later on, it got
Yes, sir.
amended. It covers races, any kind of races, whether it's motor race, motorcycle race, horse race, camel race, any race you do, it is covered here. Understood? This is how law gets amended and let us say loopholes of the law gets rectified. Are you understanding?
Yes, sir.
And now also there is one more provision has been added, that is electronic media, from entertainment programs in electronic media. Earlier, that clause was also not there, and that particular phrase was also not there. Okay, winning from lottery was there. So one person who owned in KBC, when he was taxed, he said, this is not lottery income. The department argued, why not lottery income? You see, your section says lottery income winning from lottery is taxable. Lottery is something which this person owns by pure chance. And here, this winning is not by pure chance. I have used my knowledge, intelligence, and on that basis, I have won. So it is not lottery income. It is, if at all you want to tax, it is my professional. Okay. So if that is an income, whatever money I have invested to earn that knowledge, that should be deducted. Because now this is my business income or professional income. Is it not? It's not lottery. It's not by pure chance. Are you getting my point?
Yes, sir.
Okay. As a result, what happened? You see, law has amended. Law has been amended now. And this has been specifically included. Now you cannot argue. Entertainment program in electronic media is included. So any money you earn from entertainment program in electronic media is income. There is no argument here. And any kind of race, all these kind of races are included because it only says race. But if you refer to the old Income Tax Act, maybe 10 years or 15 years back, You will not find these words here. Okay, understood? Now,
Yes.
let us come to our next point, point number 22.
Any compensation or other payment due to or received by any person in connection with the termination of his employment or the modification of the terms and conditions relating thereto.
So if some compensation is paid or received by any person in connection with the termination of his employment, let us say his employment is getting terminated, he is giving some compensation, or modification of the terms and conditions gets modified. Okay, suppose job was not transferable, now job has become transferable. And to make the job transferable, some compensation is paid. So all this kind of compensation are income. Okay. Point number 23. Can you read this point?